And now we welcome Signal Hill. Please welcome Signal Hill to the stage, a mining development and exploration company focused in the, in the top-tier mining jurisdictions of Nova Scotia and Newfoundland, where they are advancing the Goldboro Gold Project in Nova Scotia and the Pine Cove Mill Tailings Facility and Deep Water Port in the prolific Baie Verte mining district of Newfoundland. Here to tell you about these exciting projects is President and CEO and my friend, Kevin Bullock. Kevin?
Yeah, thanks. Morning, everybody, and thanks to Jo and her team for organizing a fantastic conference in a wonderful venue. So we're very happy to be here, and we look forward to coming back to further conferences of this sort. Tell you about Signal Gold, which is active in Atlantic Canada. We established a very aggressive platform for growth, targeting. We started this platform and aggressive growth strategy about 3 years ago. We want to be a 150,000 ounce a year producer within the next 5 years. And Goldboro Gold Project will certainly be a step in the right direction. This is the largest gold deposit in Nova Scotia. It is the highest grade undeveloped open pit on the east coast of Canada. And 2 weeks ago, we handed in our environmental assessment registration document to the regulators, who now have the 50-day period for public comment, and then a decision must be made by July 31st of whether it is complete and we are released from environmental assessment, or it's incomplete and needs further information. This is this document was delivered with 2 large trolleys, 6,600 pages of information. We have a management team with a track record of success in mine startups, operations, financing, and M&A. And we do have limited production in Newfoundland. This year we'll produce about 21,000 ounces. This is not our story, but it certainly is a cash engine that provides cash for us going forward on a non-dilutive basis. We are the only permitted gold mill on the island of Newfoundland, and that gives us a distinct advantage in the area. Goldboro is 100% owned. There's no royalties or streams or joint ventures. It's a 100% unencumbered asset of ours. Our feasibility study, which was filed in January of this year, so very current, shows a value of $330 million at a 5% discount NPV and a 26% IRR at $1,600 gold. At today's price of gold, this is about $600 million value and a 35% IRR. One of the most important things to me about this asset is that we can mine gold at an all-in cost of $850 an ounce, putting us in the lowest quartile around the world. The reserves delivered to the mill will be 15.8 million tons at 2.26 grams per ton. This creates the opportunity of very, very large margins for us. We are currently still expanding the project and have a lot of opportunity for growth. Point Rousse, again, 21,000 ounces this year. It should generate about $13 million after-tax free cash flow for us that helps us move other projects forward non-dilutively. And we also have exploration in Tilt Cove, east of our current mill, with good quality roads in between, where we're looking for higher grade deposits. We have a team of people that are experienced and have built mines in the past. New additions to the board are Rick Howes and Ted Kavanagh, who are well known in the industry. And we have a technical advisory committee that helps push us through with the environmental process and the exploration models moving forward. We are on the big board on the TSX. SGNL is our symbol. We have just under 200 million shares issued and outstanding, and currently sitting at about an 80 million, 85 million market cap. The Goldboro Gold Project, as you can see from the air photo, is a stunted growth forest in a very industrial area. There's no houses or people. There's previous mining, which is the infrastructure you see on this map. There's a diamond drill in the bottom left corner of this photograph showing size of these outline of what the pits will be looking like at exhaustion. Resources, 3.1 million ounces, open pit resources at 2.82 grams per ton. This is extremely high grade. Our feasibility study shows a $270 million initial capital to generate $330 million of value at $1,600 gold, exactly 100,000 ounces a year for 11 years on average. Great recoveries in the mill and fantastic operating costs. This is just what we're calling phase one, which is the open pit phase. There is also underground that still has some of the resources still in inferred category and therefore didn't go into the feasibility, but in a PEA shows an additional $350 million of value. So really $700 million of value trading at 1/10 of that in the market cap. Fantastic economics. This is going to be a 4,000 ton a day gravity CIP plant producing 100,000 ounces a year. It's an 8-to-1 strip because of the high grade. So we have to also place 122 million tons of waste. We have a fully lined tailings pond, and we have a sustaining capital cost of $63 million, which is mainly putting additions to the tailings pond throughout the process of mining. A lot of people like to show you what these types of projects do at higher gold prices. We also like to show that this can make money and work quite well even at $1,200 gold US. So it's a very robust project for fluctuations over the next 11 years, 15 years actually, through construction and into production. So a very robust project. It's all the infrastructure is situated in one watershed, which is very important to the government of Nova Scotia. There's very limited population in the area. Therefore, we'll have an employee accommodation facility. It'll be double-sized to begin with construction and then downsized for production. Typical CIP process with gravity up front, waste rock storage, organic stockpiles, and water management, all around a lake, which is background levels would be considered polluted from the late 1800s, early 1900s mining that was there, with historic tailings as well. We range between 80 and 120,000 ounces a year, depending on the grade profile and the phasing of the pits. At $1,600 gold, payback is less than 3 years, and we generate $500 million in free cash flow undiscounted over the life of phase one of the open pit mining. Operating costs in Canadian dollars per ounce. It's high margins throughout, and again, building up $500 million over the 11 years. We bought this in 2017 when it had 850,000 ounces. We paid $15 an ounce in paper. And in 2019, after I reviewed this, realized that the actual dilution halo that we were looking at for underground mining averaged over 0.5 gram. And that to me is ore for open pit mining, and therefore changed focus and have grown this now to 3.1 million ounces of resource with 1.1 million ounces of reserve at very high grades. Rapid growth, and we believe that this is going to continue because that 3 million ounces is in the shaded area of those two pits down to 500 meters deep. It's open at depth, but on strike for 2 kilometers to the west, the mineralization continues to another past producer called Dolliver Mountain. So you have shafts on both ends, a 3 million ounce ore body, and no drilling for 2 kilometers along a geophysical signature. Best place to look for a large gold deposit is next to a current one or in the shadow of a headframe. We have both and a geophysical signature. We'll be drilling this in the fall, and just doing the math, you can see there's opportunity to double or greater the resource here. This is a world-class deposit. The west pit goes 250 meters deep, the east pit 200. Our deepest hole is 500 meters. The analogs of these types of deposits around the world go to kilometers at depth, so there is a lot of opportunity at depth. We have 87 zones of mineralization that average 6.5 grams and average 2.7 meters wide, with dissemination between 0.5 gram and 1 gram. So it makes for a very high-grade open pit, but also opportunity to mine just the high-grade zones underground at between 6 and 7 grams per ton. So in the PEA, looking at an underground scenario, again, it adds another $350 million of NPV We would start in year 6, develop the underground completely out of cash flow, and we'd be up to over 150,000 ounces a year for 18 years. So that would be phase 2. Again, handing in our EARD registration document. We've been working on it since 2017. We believe that the total permitting phase now, by handing this in, will be 18 months to be shovel ready. So we'll hire a project finance advisory before the end of July, and they'll have a considerable amount of time to come up with the right type of financing for this project and its stakeholders and shareholders. We're cheap. In Newfoundland, we have the only permitted operating gold mine on the island up in Bayvert Peninsula. We've been mining for over 10 years, have a great operating team, and this year we should be doing about 21,000 ounces. The most valuable thing we have in Newfoundland is that hole in the middle of this photo. This is the original Pine Cove pit that we mined. We are now mining satellite pits, but we've converted this and fully permitted it into a tailings pond, good for 10 years capacity, solid walls. You can't get better environmentally. To build something to take 10 years capacity with hard walls today would cost 5 years of permitting and $50 million. So this is a great asset as long as we've got ore to put through it, and then we continue to search. We do sell our waste. We get royalties, so we've turned a cost center into a revenue center. We ship it out to the States for fill, and that's why we've built the deepest deepwater port in northern Newfoundland, good for 60,000-ton Panamax vessels. That creates also the opportunity to import concentrate, which could be conveyed directly into a 1,350-ton-a-day mill. So lots of capacity. This thing will go on even if we don't find more gold. We're currently mining at Argyle and permitting the next one called Stoggertite. So we have about 3 years of mine life with those two ahead of us, and we keep exploring. We've been mining for 10 years with 2 to 3 years mine life. Our next deposit that we'll be mining is Stoggertite, and that is 60,000 ounces, and we believe that when the mine plan is done, which is in the next couple of months, that'll convert to about 35,000 ounces of recoverable gold at about 2 grams. Exploration at Tilt Cove, we're looking for, we've got the entire greenstone belt around a past producer called Nugget Pond that operated at 10 grams per ton. We're looking for something similar in this banded iron formation to truck back to the mill. We're currently making $15 million a year in free cash flow at 2 grams. Imagine 5 to 10. We are looking for, the Nugget Pond mine was found with geochemical anomalies that you, the pointer here, I'm not sure. This is the old Nugget Pond mine with dispersion halos around it on a cross-cutting structure. We have similar opportunity on the lakes and ponds on strike to a 10-gram producer, which we've drilled, and we're waiting for drill results. So hopefully hopefully some of you will leave here understanding that we're very close to on the final leg of our permitting, and we will be the next build of a gold mine in Nova Scotia. We will be drilling west of the current resource, which will create the excitement during what would otherwise be the flat line of the Lassonde curve. We have quality exploration potential. We're in a great jurisdiction. We'll keep going with our permitting and our drilling, and results from our drilling will be coming over the next few months, so we should have constant news flow over the next year. And we're actively drilling targets on our properties. This is a great entry point. We've been, as management, we're not founders. We started 3 years ago, the new management of this company, and we've certainly put our salaries and bonuses back into the company, buying alongside shareholders, plus some. And that's the Signal Gold story, and we've got 5 minutes for questions if there are any. I must have covered everything. Thank you very much.